One of my favorite things to do in these videos is to compare one asset versus another and see if we can find the path of least resistance going forward. So what we're going to look at today is the share price of Oracle. That's the chart here at the top. And we've been pointing this out ever since Oracle had that really gap higher in the first half of September of this year. The stock added something like, I can't remember how many billion. It was like a couple hundred billion or maybe 100 billion. Don't quote me exactly, but it was up 30%, or actually more. It was up 35% on the day. And that more or less actually did put in the high for the stock thus far. What then happened, and this is something that we highlighted in the ensuing sort of days and couple of weeks, is that we thought that there is a chance that the actual up gap, which is this green box that I'm kind of sloppily drawing here, that it could actually fill, meaning that this would be potentially a fake breakaway gap, an exhaustion gap, if you call it. And that's kind of what's now happened. So we've seen Oracle now give back the entirety of that algorithmically driven chase to the upside on the back of their really rosy forecast that they made 5-10 years out. The question, of course, is, are there other stocks out there that might be doing something similar? And so in order to show you that, what I thought I would do is I would just take a look at AMZN, which is Amazon.com. And we are at a situation right now where I believe this stock has a similar kind of setup. And we want to be very clear, this is not a judgment call on these companies, it's just the stocks, right? Which is important to distinguish between the company and the stock. And so you can see a very similar situation here. We have a stock that essentially gapped higher after earnings on the 31st of October, Halloween, and we're now getting to the point where it's increasingly possible, if not likely, that this stock starts to basically fill that up gap. An entire complete fill of that up gap would get the stock down about 8.5% or so from right here as I'm recording this, so somewhere down to the 220, 222 area. So that's something that I think is important to watch, particularly as it relates to these tech stocks, which do tend to, these mega cap tech stocks, they do tend to have a pretty high correlation to one another over time. So hope it helps, and we'll see you in the next video.
If this video helped you, please make sure you subscribe to the channel, you give us a thumbs up like, and if you want to see this approach in action, you will want to join us in our Set the Market morning call, which happens at 9 o'clock Eastern Time, Monday through Thursday. Make sure you join us for that in the link down below. Again, subscribe to the channel. I'll see you in the next video.